Hi, my name is Ishor Adhikari. Today I'm going to discuss about Registered Retirement Saving Plan RRSP. RRSP was actually introduced in 1957. The basic idea behind this one is an individual will be able to save for their retirement, and the RRSP is registered under the Canadian federal government. So where if you're going to make any contribution to an RRSP, that contribution will be tax exempt for the year, and any investment returns that have been made by RRSP account will be stays tax sheltered in the RRSP account, and it will be taxed only at the time of the withdrawals. So there's four party involved in the RRSP: the annuitant, which is the owner of the account, the contributor who actually do the contribution on the RRSP account, the beneficiary who is said to be a beneficiary for the RRSP account, which is said by the annuitant, which or the owner, and the issuer, which is basically representing the financial institutions. There are four types of RRSP: individual RRSP, group RRSP, spousal RRSP, and pooled RRSP. So individual RRSP represent an RRSP where an individual can contribute for their retirement and a retirement saving, and they can have a multiple RRSP account with a different financial institution, but they shouldn't be exceeding the contribution limit. The group RRSP is an RRSP which is combination by the employee and employer, where employee contributes certain percentage to their RRSP and the employer also matches that one or can contribute few portion or towards the employees RRSP. And from the employer perspective, they can deduct that contribution as in deductible expenses when they are filing a tax return. Spousal RSP basically, if one spouse can contribute towards the another spouse RSP account, this will be beneficial in terms of splitting retirement income and lowering the couple's overall tax burden during the retirement. So the receiving spouse will be stays the owner of the RRSP, whereas the contributor should be careful about the contribution limit, as he cannot exceed his contribution limit towards the RRSP account. The pool RRSP is an RRSP for the individual who doesn't have access to the group RRSP, such as self-employed and or the owner of the small businesses. There is a contribution limit on RSP, which is set by the government of Canada every year. So that's contribution limit is based on the three factors: on income, a maximum percent limit, the pension adjustment of the pension reversal. You can contribute 18% of your previous earned income, or the maximum limit for that year. So for example, for 2024, you can contribute 18% of your income that you have on 2023, and the maximum you can go up to is 31,560. And if you don't use all of the contribution room, you can carry forward that one indefinitely, and which will give you more chances of having higher contribution in future years. The earned income includes income from employment, royalties, net rental income, receipt from taxable child and spousal support payments, amount received under supplementary unemployment benefit plan, net research grant, CPP and QPP disability pension received in the year. So these are the incomes where you can actually contribute towards the RRSP. So there are certain income where you cannot make a contribution to RRSP, such as income from investment, taxable capital gains, scholarship, business income from limited partnership, EI benefits, worker compensation benefits, CPP, QPP retirement benefits, OS retirement benefits, and retiring allowances. With these ones, you cannot make a contribution to RRSP account. So there is a penalty for the over contribution as well. If you exceed the lifetime over contribution limit, which is 2,000, you will be paying 1% penalties for that over contribution. Let's suppose if you over contributed by 3,500, so you have a lifetime over contribution limit of 2,000, so you exceed by 1,500, so you will be paying 1% of that 1,500 every month until and unless you withdraw that over contribution. So there is a withdrawal tax as well. So if you can withdraw money from RRSP at any point of time. So when you are making a withdrawal, so issuer will deduct the withholding tax, which is if you go up to 5,000, there will be 10% withholding tax. If you withdraw between 5,001 to 15,000, there will be 20% withholding, and if you withdraw more than 15,000, there will be 30% withholding tax. And in addition to that, if you withdraw any money from RRSP, that withdrawal room will not create any of the excess contribution room for your RRSP. Once you withdraw, that room is gone forever. RSP withdrawal that not taxes is called home buyer plan. If you are a first time home buyer, you can withdraw 35,000 without incurring any tax. And if you are a couple, you can withdraw 70,000 together, 35,000 each, and which you have to pay back in 15 years. Same as the lifelong learning plan, you can withdraw up to 20,000 for your education and your spouse education, which you have to pay back in 10 years. Investment that you can hold in RRSP is bond, stock, mutual fund, ETF, GICs. Those investment you can hold in RRSP. There are few investment which you cannot hold in RRSP. If you have a close connection to that investment, you cannot make any investment from your RRSP. That will make that investment prohibited or non-qualified, which will lead to a penalty of 50% tax on the fair market value of that investment and 100% taxes on the income earned by the investment. So what happened to your RSP when you retire? You have three options. You can either withdraw the entire amount, but remember you have to pay the tax, which may give you the higher marginal tax rate at that time as well. You can convert that RRSP to RRIF, which is Registered Retirement Income Fund, where you can get the minimum withdrawals every year, but you have to pay withholding tax for that withdrawals, and you have to include that income amount in your income tax return as well. And another one is purchase an annuity, where you can buy an annuity which will give you a regular income throughout your retirement. It can be a term or certain annuity, or it can be life annuity as well. What happen if you die in case of RRSP? So if you don't have any beneficiary, it will go to the state, and it will distribute according to the will. So if you have a beneficiary, if you have a qualified beneficiary, which is spouse or the financial dependent child and grandchild, in that case, so in case of a spouse, it will roll over, and so your spouse can actually transfer it to RRSP or the REIF account on tax deferred basis. In case of financially dependent child and grandchild, there will be various options such as purchasing an annuity, rolling over RRSP into a RDSP, cashing out and set up a trust. You can do any of these in case of qualified beneficiary. In case of non-qualified beneficiaries, so the amount will be withdrawn, and it will be fully taxed and should be reported as your final income tax return and tax accordingly. So this is all about RRSPs. If you have any question or concern, don't hesitate to ask me, and thank you for listening me today. Have a good day.